All right, good afternoon, everyone. My name is Deepak Jain. I'm a partner at Bain& Company. I run our industrials business in Asia Pacific, and I do a lot of work in auto and EV sector. I will be the moderator for today in running this session on electric vehicles and its contribution towards sustainability. To start with, I want to thank ET for organizing this session and giving us this opportunity to have the discussion. We have an elite set of panelists today to discuss the topic on electric vehicles, whether it's truly a reality or not. And I will just take the next few minutes to first introduce our three panelists. We have Mr. Ketan Mehta. Ketan is CEO and co-founder at Hop Electric, and he will talk a lot about the two-wheeler OEMs and its role in the electric value chain. Next, we have Mr. Punit Goyal. Punit is the co-founder of BlueSmart. BlueSmart is an Indian ride-hailing services company and headquartered in Gurgaon. And Punit will bring some perspectives from the e-mobility space. And finally, we have Mr. Ravneet Fukela, who is the Chief Business Officer for Ather Energy. And he will again talk about the two-wheeler and two-wheeler EVs and the role of that in the electric value chain. Welcome, gentlemen. Thank you for taking time out to be part of this session. Before we start, I just want to share a few points from my side on the electric vehicles, because this is a space which is quite exciting, as we all know, and we as Bain have also done a lot of research on this area. So I will just throw 3-4 points on the table, and hopefully that will give us a good starting point for a discussion. As many of you know, EV is growing very fast globally as well as in India. The penetration level of EVs in the global industry is expected to reach 75% by 2040, which essentially means 3 out of 4 vehicles which will be sold in future by 2040 will be electric vehicles. This trend is, of course, led by Europe and China, but is now percolating down to other geographies very, very quickly. Number 2, if you talk about India specifically, the EV penetration, particularly in the two-wheeler, three-wheeler space, has been very high already and is growing very, very fast. Will definitely touch 25% plus, for instance, in two-wheeler space within the next few years, while four-wheelers are also now catching up and should hopefully reach 10% plus within the next 3 to 4 years. The single biggest driver of EV penetration has been the total cost of ownership, TCO parity as we call it, which is expected to be reached for most segments by 2025, except for commercial vehicles, which may take another 5-7 years to get there. And finally, EV is also an important topic because it's one of the areas which can help us achieve our carbon neutrality goal. I don't know whether you know, I was conducting another conference 2 days back, and I got to know that transportation contributes 14% of all the CO2 emissions in the country. So if we are able to penetrate EV in a big way in the country and replace some of the ICs, that will also help us in meeting our ESG and carbon neutrality goals. So that's just a little bit of backdrop. With that, let me come to the agenda for today's session. We'll in the next 40 minutes or so, we'll try to cover 3 broad areas. Number 1, we will have a few questions related to the evolving EV landscape, where I will invite our panelists one by one to talk about them. Secondly, as I said, EV will play a critical role to meet our carbon neutrality and ESG goals. So we'd love to get some perspectives there from each one of you. And finally, we'll talk about the key enablers and challenges related to EV penetration in India. That's one area where I have 3-4 questions related to the charging infrastructure, technologies, government support, and so on. So we'll just go deeper into that aspect. So that's what we will do over the next 40 minutes or so. So with that, let me get started and move to the first area. And I will request Ketan for you to come in first. So my first question is on the EV landscape. What do you think is the landscape looking like for EVs in India? And do you think we have reached or we are reaching an inflection point which will accelerate the growth of EVs going forward? Ketan, over to you.
Thank you for the introduction, and thank you for inviting to this panel discussion. So in my opinion, I think EV is, of course, it's a combination of a lot of factors, but the landscape, the opportunity looks very, very bright right now. It is, of course, the impetus is given by the government policies right now, whether it's FAME or whether it's the GST and all other factors, income tax benefits and all of that, which the government is giving. But apart from that, fundamentally, there is a very clear mandate globally that clean energy, ESG, all of this is a very big theme, and especially after COVID. So I think the mindset is very clear that yes, we have to move towards cleaner and greener avenues, and electric mobility ticks all the boxes. And government is also trying to promote, especially if I talk about a country like India, which imports almost 80 to 90% of its fuel. It's a win-win situation from both sides. One is you are cleaning the environment, and second, you are reducing the burden. Of course, provided Make in India picks up with all the manufacturing and all. You are replacing your import bill also. So it's a win-win situation from the consumer side. If I talk about, of course, there are subsidies, there are tax benefits, and all of that. Plus, you get access to a superior kind of performance technology, and now we are seeing EV being much more superior in terms of even user experience as compared to the traditional ICE vehicle. So it's a combination of all these factors. I think the landscape, if I talk about the current scenario, I think it's like an exponential growth which we see over the next few years. The inflection point, I think the announcement of FAME policy was one big sort of game changer for the industry, where things have suddenly become so bright, and the growth rate has accelerated so much that yes, I would say that inflection point has reached. But yes, it's driven by subsidies currently. It might not last for long, but yes, it's given a good kickstart to the industry to sort of stand on its own feet and take the next steps and take it forward. I mean, not only FAME, I would say it's a PLI scheme which has been launched, and the other source of benefits and the swapping policy which is now coming out in the budget. All of these things, I think, in the right direction, and that inflection point, I would say yes, it has come over last few months.
Thank you, Ketan. You talked about a bunch of drivers which are leading to the growth in EVs, and we'll come back to them in a few minutes and talk about each one of them in more detail. But before we do that, I have one question for you, Ravneet. Ketan clearly thinks that we have reached that inflection point. But is that true for every segment of EVs or automobiles in India, or you see different segments behaving differently?
I think most definitely there is it differs by sector and vehicle class. The obvious one, the lowest hanging fruit is two-wheelers, and within two-wheelers is scooters. So in the month of January, the e-scooters were about 7.7% of all scooters sold. The month prior to that was 6 point something percent. Prior to that was 5. So almost month on month, we're seeing a 1% increase, right? So looks clearly from a scooter perspective, I think that train left a long time back, and right now I think with the momentum that we're seeing, it is irreversible now. So it's really a question of more products coming in, credible products coming in, and very importantly, solving for the supply situation that is killing all of us at this point in time. So scooters is on its own path, right? I'd say that things like e-rickshaws, three-wheelers, etc., are again, I think, on a good path, because the use case there is really centered around TCO, where it's not as much as about great performance, great build quality. As long as it's reliable, it runs, and it's it has good TCO. So that proposition is technologically not very difficult to put together, to build a product like that, right? So those are obvious cases, right? Buses, etc., while the TCO will take time, but parts of that entire set where government has direct control, state or central, it sort of is being driven by almost mandates. So anything that's driven by mandates takes its own time, but at least there's a push that's in the right direction. I think from what I understand, the slowest are going to be cars at this point in time. Firstly, there's a question of just choice and availability. Like there are no options, honestly. So even if today you have like 25 lakhs in your pocket, 20 lakhs in your pocket, like you have like two, three choices, unlike petrol, for the same money, you have like 25 choices. And even if you look at the announcements made by people, forget what's already out there, just the announcements of when people are introducing, I'm talking about scale players. We're still a few years away before we start seeing proliferation of vehicles across different need state, different demographic segments, different price bands, etc. So that'll take some time. Also, the TCO, takes. I mean, for those who are driven by TCO, that'll take longer because while the percentage difference may be similar between a scooter and a car, but the absolute is very high, right? So it's really the driver is different than it is for a lot of two wheelers. But I just want to make one point about this whole TCO business. While it's important, but one point that Ketan made was that the reason we see a lot of change of late, of course, there's fame and therefore pricing is better, the sticker shock is lower, etc. But people are recognizing electric as a superior product, as an upgrade, as opposed to this saves the world or this saves me money. Because if that was to work, we've been selling scooters for the last 12 years in this country, like more than that, 13 years, 2008, 2009, when we started selling. If that logic was enough to make people buy product, we should be selling in billions by now. But the fact is, we did not, right? So it's only when people see this as a credible alternative to petrol scooters, and in this case, actually, is an upgrade in terms of the basic drivers of what a scooter is meant to do. The drive, feel, dynamics, top speed, acceleration, handling, banking, whole bunch of things, right? Once you cross that bridge, people say, you know what, I could have bought a Honda Activa or something else, but this is good enough as a scooter. Then you start, this conversation about, hey, this is touchscreen dashboard, remote diagnostics, and those are multiple layers, right? So I think if you look at all that put together, scooters are really on their way. Honestly, right now, every credible OEM today is able to sell whatever they can produce, and everybody has a line outside their door, not being able to supply what we have to. So I think so. We've reached an inflection point, most definitely, as an industry.
Very interesting. So I think what you're saying, Ravneet, is two-wheelers are of course ahead, three-wheelers are not far behind. Buses, not because of economics, but because of government mandates, will hopefully get there. And then there's PV, where there's lack of choice today, but hopefully will come as more and more companies are coming out and announcing new models. Hopefully over the next 5 years, that will accelerate. Very useful. The other interesting point you made is about people looking at EVs more as a genuine alternative. Or credible alternative to upgrade rather than just thinking about, let's say, cleaning the environment, right? Because the economics and that upgrade really plays a vital role, which is where I think Ketan was also going from a mindset change perspective. We'll come back to it. One area I do want to probe a little bit more, and Puneet, I will invite you to answer that question is, even though Ravneet just said that the more important factor is about upgrade rather than thinking about cleaning environment, but to what extent EVs will help us in meeting our ESG or carbon neutrality goals? There are other things happening, right, in the country. There's solar growing very fast. There's wind coming in. A bunch of other initiatives government has launched. So where do you place EVs vis-a-vis other areas or initiatives that government is pushing?
I think Ravneet and my colleague, they have made the clear point that EVs will take time to grow. Ketan and Ravneet, it will take a lot of time for EVs, EV adoption to happen, because the big challenge that we see is charging infrastructure has not been developed. And like Ravneet pointed out, that a lot of manufacturers have not started manufacturing EVs, but that is changing. That's changing globally, and that's changing in India also now. Our thought process was a little different. We knew that this is going to take time. We were watching the telephony revolution. Some people got their first mobile phone in 90s. Some people got in early 2000s. Some people are still buying their first mobile phone in India now. And it took India nearly 28 years or 30 years to completely shift from landline phones to now everybody having a cell phone. So we really believe that this is a long-term game. The next 20 years, India and China will be the biggest adopters of electric mobility. And because, like Ketan also mentioned, India imports a lot of fuel. So we believe at Blue Smart that it makes sense today. And why we are doing it? Because of the TCO gain. So So if you see the running cost of a taxi, unlike a car which is driven by individuals for 60 kilometers or 80 kilometers use case, you're not able to utilize the car for that matter. And a lot of people are shifting now towards not owning cars and probably subscribing a car. Taxis run for more than 200 kilometers. So we really believe that all globally, and if I'm sure you're doing so much of research globally, that all ride-hailing fleets in the Western world, in India, will eventually go electric. And that's largely driven by TCO. The cost of operating the car is super low. Today, we're talking of 2 cents per kilometer versus CNG or diesel or petrol, which has seen exponentially increase in prices. So the cost of CNG has gone up by 50% in the last 4 or 5 years. The cost of petrol and diesel have gone up by 100%. So 2x increase in the cost of petrol and diesel from the 2016 circa to a 2022 period right now. The cost of petrol and diesel has gone up. So we firmly believe that all ride-hailing fleets will eventually go electric. Consumers will eventually buy electric cars in mega cities where obviously cost of operating the car is only going to go up. So it's eventually going to go mainstream, but for taxi, it makes sense today. And now, in case of transportation, it contributes nearly about 20% plus to the air pollution in mega cities of India. So it's very, very important. The AQI is north of 250 all through the year. It crosses 400 in the winter season. So I think it's imperative for public transportation fleets, buses and taxis to first accelerate the adoption of electric mobility in mass scale on the back of better unit economics, on the back of falling cost curve of cars and batteries, and eventually individuals will also shift to electric cars. This is my thought process, that we have to shift to electric because of the pollution challenges, and also it makes unit economic sense.
Very helpful. Ravneet or Ketan, you want to comment on anything related to the ESG related contribution from EVs based on what Puneet just said?
So I think it's an easy win to my, the way I see this is that if you're able to transition the mindset from ICE to EV, then you're just setting us up in a direction which doesn't need selling every time. Like once you buy into the electric dream, then your second, third, fourth vehicle, etc., this is always going to be electric. And so the idea is to, if we can make this cross the hump now, which like I said earlier, in some categories we already have, then the impact is very, very profound, right? So the impact is not just limited to ESG. We talk about geopolitics and oil, and there's a war right now. I mean, eventually the ramifications are really, really huge. The industry many times get dissed, by a lot of people saying, hey, listen, the generation is still from coal, et cetera, et cetera. Sure, that's true, but that's a parallel path you're following with or without the EV revolution, right? So that's anyways happening, right? So I think any which way you see it, but the only call out I have here, Deepak, here is that while transition to EVs is great for the environment and meeting our goals, what's great in reality may not be the selling story for consumers.
Yeah.
So if I start telling you, hey, buy electric because it will save the world, quite honestly, being in the business, I can tell you nobody wants to pay a penny to save the world, right? So saving the world is the government problem or somebody else's problem. Mujhe gaadi chahiye, right? So essentially, you give a vehicle that consumers love, and that happens to be EV, and that's when transition happens in mass scale.
Wonderful. Let me move on. I will come to the next section where I want to talk about the key drivers for EV penetration, and in your opening answer, Ketan, you touched upon some of them. The way I think about it is I divide it into 4 parts: charging infrastructure, technology, economics, and government support. And there could be more, like you talked about the mindset, consumer perception, etc., etc. Let me just first focus on these 4 and start with charging infrastructure. There's a lot of news on charging infrastructure. Everyone wants to do it, and I think the companies 3 of you belong to have also been doing a lot in this space. Where do you think we are today? Let me ask Ketan first. Where do you think we are in terms of charging infrastructure? How is it evolving? And are the initiatives that are being taken by both government and private institutions enough to support the kind of growth we need in EV over the next few years?
So see, charging infra is it's like a chicken and egg situation. Vehicles and charging infra have to go hand in hand. One cannot happen without the other, or one cannot happen before the other. It's just not possible. So I think it's both are working in parallel, and it's a lot of work to be done. And because something is being built from scratch, there was nothing there, and it's being built. So, but yes, the I think the initiatives taken by the government definitely are there. I've seen a lot of PSUs and a lot of oil companies and a lot of these energy companies coming in and putting up sort of charging infra and all. Also, the need for so we are a big believer in swapping infrastructure, honestly, for the 2 and 3 wheeler category, and that's where we want to make. I mean, of course, people can differ on this panel, but that's where we believe the game lies post the FAME subsidy and post the government incentive gets over. That's where the real game lies for this category of vehicles, 2 and 3 wheelers. So that's where we are building our technology and our infrastructure. The swapping policy is going to come out probably next 2 or 3 months. We had a good session with Mr. Amitabh Kant a couple of weeks back. So yeah, so that's where we believe it's going to we'll sort of invest and we'll sort of set up the infrastructure, and that's where we believe it's our game sort of differentiation factor on the energy infra side. At the same time, I think the 4 wheelers and the other sort of form factors. I mean, probably hydrogen will kick in at some point, and so a different kind of infrastructure is needed for that, and for probably cars, a different kind of infrastructure is being set up. So I think it's a work in progress. It's a very necessary thing. We cannot deny that. I think, as per my sort of information from the market, 80 to 90% of the consumers who buy or not buying EV today is because of range anxiety, or it's because of the charging infrastructure related issues. So that's the biggest bottleneck why people might not switch to EVs, and so we have to solve that together. And if that is solved, I think the transition will be much easier, much faster, and it is definitely it is going to take place. And this is an enabler for the consumer to believe in electric vehicles and to believe that they will not have any issues and any problems with that. So I think this is the biggest sort of driver, and we cannot ignore that. So yes, this is something to focus on, and I think the right policies and right initiatives are being taken. Of course, it's a work in progress.
And Ketan, if I may just probe that a little bit more, because I know you guys at Hop also are doing something on, I think, battery swapping and other areas. So you want to give a couple of examples on the kind of innovations which are happening on charging infrastructure, if you have something in mind.
So I think what we are doing is, so we've been running our pilots across cities for last almost now 14 months. We've been experimenting with various business models, various batteries, various consumer sort of expectations. How to just fit in, because of course right now you have FAME where you have 40% sort of subsidy being available, but that's not going to last forever, and battery prices are honestly not going down as was believed. Probably in the long term it might, but I think what I've seen over the last 6 to 12 months, it's only going up or stable, whatever. And the material shortage and all of that is going to kick in because the demand is increasing. So on the technology front, I think what we've experienced is one is the so our technology we have developed is compatible with both 2-3 wheelers, L3, L5 scooters, all of that. So the infrastructure has a quicker payback time, so that because it can be used across form factors and across vehicles. So that's a standardization we have done. Second is on the battery life, because the swapping infrastructure works well or works best when you can enhance your cycles and battery life, and the probably it's not as much of a concern for a fixed battery system, but it is much because every cycle gives me an additional return on my investment. So we have worked on that a lot, and with various sort of not only chemistries, form factors, various through software we are able to enhance our battery capacity by at least 50, battery cycle life by at least 50%, just by software changes, and that is what we have learned over the last 12 to 14 months. And that's what, once the swapping policy comes out, we are going to implement that at a larger scale. Another, keep learning things about the habits of people, how they charge, how they swap. at what times, and so it's about sweating your infrastructure as much as possible. So as many swaps I can do from my swapping station. So a time of day kind of concept where the morning rush hours and evening rush hours probably have a lower cost, and afternoon you have a higher cost. You have a higher cost, and afternoon you have a lower cost. So those kind of innovative business models is what we are experimenting with right now. We are providing sort of an unlimited battery warranty in a way with our vehicles, with a swapping sort of package, because we are able to upgrade our batteries as and when required. And recycling of batteries will become a very, very big play, because all of these batteries have a limited life, probably 5 years or whatever. So, and so many vehicles coming on road, and then so recycling and getting the material out is another big aspect where we are working on, and that's something will make this entire ecosystem sustainable. Otherwise, the mining and getting new materials out is actually very, very toxic for the environment. So as much as we can talk about the the environmental sort of savviness, but the real place where the work happens, I mean, it's not that. It's quite toxic. So I think the sustainability is very important. If you can recycle the materials and reuse that, that will be very, very important. And that's where we are working on that technology. So I think these are some of the factors. And then thermal management of batteries. We have active thermal management in our batteries, where we are able to control the temperature, in the summer, especially because we started in Rajasthan and Jaipur, where temperatures can go as high as 48 degrees. So it was very important for us to do that, and that's what we worked on and developed that technology. So I think there are various sort of aspects where things have been developed, and once the sort of policies are there, I think it will be time for us to sort of implement those. Yeah.
Wonderful. Thank you, Ketan. Very comprehensive. Let me just, in interest of time, move to the next area I want to touch upon, which in my mind is a big enabler of EV's growth. I would say the way I frame it is new technologies and new business models. And Puneet, let me invite you to throw some light on these two areas. And the specific question is, from a technology and innovation perspective, what kind of new areas which are emerging in the whole EV value chain? And second is, more specifically, what kind of business models we can see in near future? In fact, your company itself, BlueSmart, is kind of a new business model which has emerged over the last decade or so. So do you see some more new business models coming up? So maybe break it into two parts. First, talk about technology and innovation, and then about the business models.
Sure, Deepak. So, so we knew from day one, the first, so now we have 3 generations of cars in BlueSmart. And we knew when we were writing the white paper back in 2016, 17, 18, these were still early days for us. And we didn't have any electric cars in the market, which probably had range anywhere near 200 kilometers. And we figured out that this is not the right time. So timing is very, very important, is something that we understood at an early stage. In 2019, when we started with first 70 cars, the initial cars came with a small range, low range of about 110 kilometers. With each passing year, the range increased. Today, the cars that we are onboarding now, we have about 1,020 cars on road on the BlueSmart platform, which is the largest fully electric ride-hailing fleet in Southeast Asia. And the new set of cars which are coming out about 220 kilometers in terms of range. And as we speak to more and more manufacturers in India and globally, we understand that 2022, 2023, most of the cars which are going to come will have range of 300 kilometers. We have some cars, about 40, 50 of them, which have range of about 350 kilometers, which are little high-end cars. But majority, 90% of our cars are in the range of about 180 to 220 kilometers. In terms of industry, we also wanted to see the use case of these cars. We do not currently operate in the entirety of Delhi NCR. For operating in the entirety of Delhi NCR, we need about 25,000, 30,000 cars. By end of this year, we should probably scale to about 4,000 cars. In terms of business models, we thought that ride hailing is the best place to start with a very differentiated supply side model and a very consumer centric business model. There are 2 more incumbents in India which are in the ride hailing space for the last 10 years. But we saw for the last 2 or 3 years that the supply side on those two platforms were coming down, like crashing. And zero cars were added on those two platforms in the last 3 or 4 years. So we thought that why don't we build a different type of supply side model wherein drivers will not need to own cars. So in our model, drivers do not own any of the cars. We sign institutional lease agreements with massive institutions who lease electric cars to BlueSmart. This is again an innovation. We have been able to, at an early stage, sign agreements worth 15,000 cars, where BlueSmart will onboard 15,000 electric cars on the platform BlueSmart through 6-7 large global institutions who are investing in electric assets. Now, my colleague Ketan and myself, we both come from the renewable space, and we knew that these are depreciating assets, whether they're solar panels or wind or electric cars. And there are few global institutions who believe in investments in these assets. While the assets depreciate, with a capital D, you also make money. So that was one innovation. And I think that we are seeing similar companies like BlueSmart with similar fundamental tenets in the West. So you have Via, you have Ride Alto, and you have Revel. Revel recently raised $126 million from BlackRock 2 days back. And with similar fundamental tenets, where assets are not owned by individual drivers and assets are owned by global institutions. On the customer side, we again wanted to offer a customer-centric ride-hailing service. So we launched 2 industry-first features of zero ride denials and zero surge pricing. Of the 33 million kilometers we have covered, serving close to about 12 million trips since launch. And these have been without any ride denials. These have been without any surge pricing from our side. So that was again an innovation in the ride-hailing space. No company in Asia offers zero ride denials and zero surge pricing. These are industry-first features in ride-hailing space. There are several other car sharing, scooter sharing platforms in India. I think they are also eventually going to go electric. We believe that most of two-wheelers, in fact, obviously, India has the lowest asset ownership. Less than 3% of Indians own a car. India largely is predominantly a two-wheeler market, which Ravneet and also Ketan highlighted. We believe that most of India will really see a great adoption of two-wheelers, for delivery purposes or logistics purposes. Also, individuals will switch to electric because of the lower cost of operations. So there could be some business model being built around there where you could do delivery on two-wheelers, or you could probably use a two-wheeler for logistics. But predominantly, we believe that we see a huge opportunity in building a fully electric ride-hailing fleet, which is a full stack model. So like Ketan was saying some time back, you need to have control over charging infra. So what we also did is that not focus on building a ride-hailing business, to build a full stack ride-hailing model. So we also operate India's largest network of EV super hubs. This is again an innovation from our side, although it's happening in the West. The largest EV super hub in the world, one of the largest, is being operated by BlueSmart today. The largest EV super hub in the US is operated by Revel. They converted the old Pfizer building and deployed 25 fast charging stations in one single location. We have built 9 such EV super hubs in Delhi NCR. Each EV super hub can park and charge 80 cars simultaneously. Seamless charging infrastructure. You zoom in with your car, charge your car, and zoom out, which also means the utilization was very high. BlueSmart could utilize these chargers. Our utilization is at 33%, which is the highest in the world in terms of charger utilization. We got a lot of data from energy companies and standalone charging infra companies, which showed up data of about 14-15% in terms of charger utilization. All the chargers that have been set up by us, we have 350 fast chargers and about 600 slow chargers, nearly about 1,000 chargers on our platform. And these are with a utilization of 33%. So that again, we see as a huge opportunity in the charging infra side. And if you can probably bring it together, connect real estate, energy, infrastructure, and mobility. And if you can connect all the 4 dots, I think that is what India needs. That is the big challenge that we all have to solve together. Put all the pieces of the puzzle together and build out a fully electric ride-hailing service and a charging infra service. Basically, create an ecosystem. So there are good opportunities for other companies to also address this EV ecosystem challenge. And if you can address that, I think then that's a very solid, fundamentally very solid business model, which has a massive opportunity to build upon. These are my thoughts.
Very, very helpful. Thank you. Thank you, Puneet. Ravneet, let me bring you in here. this point that Puneet made, that ultimately it has to evolve, no matter where in the value chain you're starting from, it has to evolve into a full stack model with leading players controlling different parts of the value chain, what he also called the EV ecosystem, building it. What are your thoughts on it? Do you agree with him or do you have a different point of view? And secondly, in that context, how do you think about, let's say, your portfolio in future? Is it going to be going deeper into the OEM play, which you're already doing, or spreading more across the value chain and doing other things and capturing the profit pool in other segments?
So I think agree with Puneet. I think we are also very strong believers in an ecosystem play. This 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 technology and this industry where we are at this point in time just allows us to relook at how the mobility game is played for a variety of reasons, right? So if you so there is there's a ride hailing view that that Puneet has sort of laid out. Let me lay out an OEM view on the ecosystem. So if you look at the energy spectrum, so there is generation of energy, there is distribution of energy, there is storage of energy, and there is application. Let's say there are four stages there. Right? Generation is a place which is, I think, a base too far from any OEM, right? But if you look at that today as what looks like a scooter company today, talking about Ather now, we are in the distribution space through our charging infrastructure business. We are in the storage space. Today, our storage is limited to automotive batteries, but as anybody who's been in any space will tell you, the most demanding use case, or one of the most demanding use cases for batteries is automotive. If you can crack that, everything else is sort of becomes quite easy, right? From a static storage perspective and a bunch of other use cases, right? And then there is application, which today in our case is scooters. So we're already playing in a larger energy space. And if I fast forward, let's say 2 years, 3 years, the charging infra we like to have maybe in about 2 years' time around give or take about 3,500 charging points across all these fast chargers across the country, right? So there's a fairly healthy and dense distribution network. We at that point in time, the first round of batteries that have gone into field will start coming back after 5 years, 6 years in operation, right? Then there is a second life use case for batteries, whether it's static storage and data centers or solar applications, EPS, and a bunch of other things, right? And then there is a larger sort of a play in storage where we are not just looking at reusing the batteries that are coming back, but going after a much bigger play in fundamentally building batteries for other applications, right? So the play is much bigger, right? And therefore, when you look at business models, we're not looking at a business model saying how much money can I make in a traditional OEM business. What you want to say is that as a full stack solution, where is the profitability coming from, right? And even if I take a limited view of just the scooter business, even not the company business, right? Even within the scooter business, right, there are new things emerging. Today, we're not in a position where we are saying, unlike all traditional OEMs, we don't expect our partners, the retail partners, to make truckloads of money on service and spares. We don't want that, right? From a product development perspective, we are pushing a model where we are minimizing the need for service at all, right? Maybe once in 2 years or something, when something happens, there is no concept of fixed service. We are inching towards there. So we're going fundamentally against what is the traditional model of create service opportunities, because sale mein to jo paisa banega so banega, right? So we are saying if you want to make money, we'll find other solutions. So there are subscription plans, there are connectivity plans, there is a service plan, there's extended warranty, there's a buyback, and there's a whole bunch of things we're working on. Stuff we had sort of announced but not rolled out yet. Battery as a service. Now, battery as a service in swapping is an obvious use case, but battery as a service in fixed also is a use case. It's just that physically it goes with the vehicle, but the ownership lies with the OEM, right, or somebody else, not with the customer. So I think anyway, whether you take a limited view of the scooter business or you take a larger view of the automotive business and the energy business, I think we just look at fundamentally very different business models. And this is, somebody had raised the example of mobile phones. So I come from that world. I come from Nokia, and this is like early days of smartphones, where when smartphones came in, you build the fundamental capability of smartphones, of connectivity, etc. And over a period of time, you discovered use cases, that are monetizable, right? So that's a process of discovery that sort of comes in as you go along. But fundamentally, what we build is a connected ecosystem now, right? And that just opens up opportunities today that I can guarantee you, and I'll put my money on it, right? Like 3 years, 4 years from now, for somebody like us, a very large proportion of our gross margin will come from opportunity today we don't even know, we don't even see, right? And that's the opportunity we're looking at, right? So it's really a very, very different game.
Wonderful. I think you almost, Ravi, thank you for answering it, but you also threw in a few hints which lead us to the next question, which is related to the economics of any business model in the EV value chain today. And I will probably invite Ketan to answer that question, and then we'll love all of both of you as well to chip in. Ketan, is the economics looking attractive in this EV value chain? And given what Ravneet said, with the new use cases coming in, which, and hopefully at least some of them are monetizable in future, how will the economics change over the next few years?
The economics, if I talk about, let's say, TCO for two-wheelers especially, the TCO economics already made sense, I think, already a couple of years back for this category. And now with FAME subsidy and petrol prices going up and all of that, the economics has improved. So yes, for this category, at least I can say at least two-wheelers, three-wheelers, and these kind of categories, it already makes a lot of sense whether you compare with CNG or petrol or any other form of fuel. So yes, the economics already makes a lot of sense, and it is going to make more sense because first the policy is very clear: take from this hand and give it to this other, because you are taxing the petrol and diesels as much as possible, and you are subsidizing the other part. So I think that will continue to go on. And now with the PLI coming in, and the kind of incentives which are being offered under the PLI scheme, I mean that just changes the game altogether. So we're talking about huge incentives being given. The size of the policy is huge, and so the economics will make further more sense as we go forward. And I think the main thing is that to localize the supply chain is very, very important, because as the demand is increasing so much, we don't want to be dependent on a country. Probably we might not have very good relations at some point in future. And so it's very important that we localize the technology, localize the supply chain. And already on the energy generation side, I mean solar, of course the plans are there, and big investments are being announced. And similarly on the consumption side, let's say electric mobility and battery storage, I think it's very important that the supply chain is localized, because that's a big risk which we carry when we talk about economics, because almost in electric vehicles, probably 40 to 50% of your cost of the vehicle is a battery. So the key components, the key materials have to be sort of tied up. The manufacturing has to happen locally, so that the external shocks and external factors today, I mean, any external news, any external factor affects your economics. So those kind of risks have to be mitigated. So yes, I think the economics looks pretty good currently, and it's supposed to improve, I would say. The only blip which might happen is after the FAME goes out. I think let's see how things happen after that period, and how government sort of comes out with the next sort of set of measures. But I'm sure, I think the policy measures are going to continue in some form.
So are you saying, Ketan, that for OEMs, from OEMs perspective, the economics is already looking good because of the FAME benefits or the other areas you talked about? Is it? Can we see it? Let me ask the question in a different way. From a customer perspective, I hear you that on a TCO basis, from customer perspective, we are already there. But from OEM's perspective, is the P&L going to be sustainably profitable in near future?
Ultimately, for next few years, I think we are looking at a demand problem more than a supply issue. So as long as that, I mean, if I talk about a short to medium term view, of course, everybody is going to get enough business and enough sort of things. But once the consolidation happens at some point, and it is bound to happen, I mean, you cannot sustain an industry, with so many players forever. So once that kind of consolidation happens, I think it is going to depend, on who's going to remain and who's not going to remain. So, but one thing is for sure, that the sector is expanding. There are multiple avenues of revenue which are coming in, and somebody will take one form or the other, maybe energy side, maybe combination, maybe OEM or mobility as a service, whatever. So there are so many business models which are being created. So I think everybody has to find its right place, right space, and what you can do differently to ultimately switch and expedite this transition from traditional to electric mobility. And that's the whole objective, I think, for everyone, to expedite this transition and to help in some form or the manner to enable that. So I think there are so many avenues of business right now that you need to really choose where you want to add value. That's pretty much.
Okay, very good. Ravneet, let me invite you to add to Ketan's answer on this economics, and also add another question to it, whether government is doing enough to make it sustainable, both from demand growth perspective and also from supply economics perspective. Any thoughts from your side on this?
See, the government has been very supportive over the last few years, and in the early days, when days of Phase 1, I mean, you could see the pushback from the petrol players, large petrol players, to slow down the adoption of electric vehicles. But the government actually stood firm on their ground, right? And bear in mind, manufacturing is a large proportion of our GDP, and within manufacturing, automotive is a very large proportion, right? To be able to stand up to that group of people, I think it took courage, and which I think the government demonstrated amply, right? And then the Phase 2 came in, which changed the game quite dramatically in terms of solving for upfront. TCO was never going to be a problem, but upfront sticker shock was a problem. We solved for that, right? And obviously, TCO became better. Then the state government jumped in, and then the whole thing about there's a GST, and there is a PLI, and a whole bunch of things, right? So I think from what the government can do, quite honestly, I don't think anybody expected government to do as much as they've already have done, right? So full credit to the government on that. Sure, there are some niggles on the PLI side, who gets, who doesn't get. Those are part, but fundamentally it's in the right place, right? I think our biggest risk that we carry in this business today, as an entire industry, is not the risk of demand. I don't think we'll have that problem, right? We see demand growing, and as better products keep coming in, demand will keep growing because costs are sort of coming into control, right? So the issue is today there is very low predictability on the supply chain side. Whether there is the cell side, whether it's electronic side. Now, it seems to be that the electronics will get solved over the next 2 to 3 quarters, right? The way things look like, because it's a problem that impacts everybody in the world across industries. So, the world is all rallying around that. So chances are it will be solved, right? But that's one problem to solve. The other problem we have is on the cell side. Now, we're just struggling to get, the allocations for cells from major players for the entire country, right? Now, those things will come in the way, because right now it's a situation where there is market momentum. There are people who are hungry for products. There is an 8-week waiting period for products, and we have manufacturing capacity which is lying idle because we're not able to produce as much as we are capable of. So unless we solve for that, which is a combination of localization and just securing and building a strong supply chain, once that piece of the puzzle is solved, then I think we are sorted, right? Because demand is solved for, there is manufacturing capability, there is also a learning curve of manufacturing, product development. I think a lot of companies have gone through that and are going through that. Then there was a problem of, is there adequate choice for customers, with all the big players coming in. I think if you look at the entire jigsaw, all those pieces have been sort of coming together. This is the only one. But unfortunately, this is one of those areas where OEMs individually can't solve their problems. So this needs an active intervention by the government, not just by way of money allocation, which they've done, but it just needs a stronger impetus, right? It needs big players to come in. It needs lobbying by governments to get big players to come in and set up, manufacturing here. Like, for example, we talk about, semiconductor and chips, right? Like, the issue is China is ahead for a variety of reasons, but also the fact is that anybody who produces China has a strong local demand itself. Doesn't mean that like products that are produced there are consumed there, but products that are just produced there, right? So there's such a big local demand that even if they do zero export from there, it still is a very strong sustaining business, right? So I think those things have to be solved for. Cell is a big one to solve for. Once these two are solved, honestly, this will go like a rocket, and having spent some time in this business, there were times where we were sort of almost riding on wishful thinking, saying, "Ye to badne wala hai." But today you talk to anybody in this ecosystem, anybody, right? Any price point, any kind of category, people are saying, you know what, just give me a stable supply chain. I'm scaling the manufacturing, and then you see me sell. So I think we solve for that. We solve for a long-term future of the industry.
Wonderful. Thank you, Ravneet. Before I close the session and summarize at least my key takeaways, Puneet, Ketan, you want to have any last words or thoughts you want to share?
Sure. Just to add to what Ketan and Ravneet said, our business is the fundamental tenet on our business side is the fact that the TCO makes sense. I mean, we were not to start a ride-hailing service if TCO did not make sense. Gone are the days where CNG was at 38 rupees a kg. Now it's nearly 60 rupees a kg. Gone are the days where petrol was about 74 rupees a liter. It's now north of 110 rupees a liter in most parts of India, like Delhi NCR for that matter, or Bombay. And with the current global scenario and what's projected, we believe that the costs are only going to go up. For freight, logistics, ride-hailing services, where assets move more than 100 kilometers a day, maybe 200, 300, 400 kilometers, with every kilometer that you move forward, it makes sense you to go to electric because of your operating costs are super low. So we thought that the best use case today, and maybe for the short term, mid-term, will continue to be logistics, delivery, or for that matter, where two-wheelers could be used, largely, and also ride-hailing will be a big beneficiary of this lower cost. The capital cost part, like even Ravneet was pointing out, right now is largely dependent on the chip supply shortage or the battery cost. This will eventually go down, like what happened in solar. Ketan and myself are beneficiary of. We saw initially solar power plants at about 15 crores a megawatt. Today they're nearly about 3 crores a megawatt or lower. So that's eventually going to happen. But the best part is, the good news is that the costs are going to go down. The cost of an ICE and an electric car today will be the same. Today it's like $13,000 for an electric car, about $10,000 for a BS6 ICE. So there's a difference of 25%. But if you see the cost of operations, you have a delta today, massive delta. So, in our business model, if we run electric cars, it costs us about $400 a month. ICE, it costs about, CNG base costs about $550. On a petrol diesel car, about $650. So it makes sense today. Will it make sense tomorrow is very, very important. And we believe with our past experience and what we are seeing in the industry, it will definitely make sense tomorrow also. And this is why we think that largely, predominantly, ride-hailing, logistics, delivery will rule the roost for the short-term, mid-term. And like Ravneet pointed out, with better products, better consumer experience, good, solid products, once consumers believe that besides the TCO benefit, there are good products in the market, they will also start buying individual assets at large scale. That will happen post-2025.
Wonderful. Thank you, all three of you. Let me just quickly summarize. Very, very insightful, interesting, and rich session. There are 5 or 6 takeaways I have jotted down, and let me just quickly synthesize, and if you want to add anything to it. Number one, I think I love the way, Ravneet, you described it. It's a rocket which has already taken off and nobody can stop it. So EVs will increase in the Indian market. Of course, there is a phasing of it, or there is a sequence of it, with two-wheelers being ahead of other segments, and there is three-wheelers, and there is buses, and there is PVs. But EVs have arrived, and the penetration will only increase across segments. Number two, on the ESG side and carbon neutrality side, we spend a little bit of time, and I think my takeaway is that yes, EV will contribute. Of course, it will happen over a period of time. It's not going to happen immediately, but EVs will be a major contributor to our ESG and carbon neutrality goals. 3, we talked about the charging infrastructure. And one of you talked about the range anxiety point, which is leading to 80 to 90% of the people not able to decide to buy an EV. It's a chicken and egg problem, as you described. We are on right track. We are doing some initiatives both on the government side and private institution side, but we have a long way to go. And hopefully, as we scale up and we see more EVs on the road, more charging infrastructure will follow. Number 4, we spend time on technology and business models. Wonderful to hear your thoughts on the full stack model and the EV ecosystem. That's the way to go. We heard the 2 different perspectives, one from shared mobility and second from OEM, and then both hinted towards an EV ecosystem play. With several new use cases coming in, like you talked about battery as a service, Ravneet, and then many of them becoming monetizable in near future. Fifth, on the economics part, I think at least for a couple of segments like two-wheeler, three-wheeler, from a TCO perspective and from a customer perspective, we are already there. From OEM's perspective, I think one of the things I heard is as the scale-up happens and localization of supply chain happens, the economics will become sustainable with time. And finally, we talked about the government support, and you guys brought in a few other risks. While government has done enough, probably more than what anybody expected to support EVs, but there are other risks in the value chain, be it the chip crisis, which all of us know about, or even the cell manufacturing and the dependence on other countries for batteries. So there is still a need to think through all those issues, because just solving for TCO is not going to be enough. Sooner or later, the supply chain will start cracking up, as we are already seeing that there's more demand right now in certain segments, but supply is not able to catch up. So those are my takeaways. Hopefully I captured all the key points, but please do add if I missed out anything.
Sure.
No, all good. Yeah, I think you captured really well.
Wonderful. Nice meeting all three of you. Thank you once again for sharing your thoughts. We'll close the session with that. Have a great afternoon and great evening. Bye bye. Take care.